welcome to a special edition of All About Money. I'm Chloe Fong. I'm now at the Hong Kong Convention and Exhibition Center, where the 7th edition of Hong Kong FinTech Week is underway. And with us today is Mr. King Leung, the head of FinTech at Invest Hong Kong, which is a government department responsible for attracting overseas business. Invest Hong Kong is also one of the organizers of the Hong Kong FinTech Week. So it's great to have you today. Thank you for joining us.
Yeah, thanks for having me.
One of the biggest highlights from the Hong Kong FinTech Week is the government policy announcement regarding the virtual asset development in Hong Kong. Now that I know authorities are changing to a more welcoming attitudes towards this volatile sector and signaling that the retail traders could be given a certain degree of access to trade virtual assets, including cryptocurrencies. What do you think this means for the Hong Kong FinTech community? Do you think it will be kind of like a game changer for this sector?
Of course, this is going to be an enormous game changer. And the reason is because when a lot of the people think about cryptocurrency or digital assets in more broad terms, people think about Bitcoin, Ethereum. But then if you look at the market cap, essentially you're looking at today is roughly $1 trillion US dollar or market cap of the cryptocurrency. Again, Bitcoin, Ethereum, Solana, Cardano, and so on. But then you think about the potential of tokenized assets. It can be evolving assets such as real estate, bonds, and other so-called traditional assets. We are talking about between $200 to $300 trillion of assets that can be tokenized in the form of digital assets. As a result, the massive opportunity is far beyond just Bitcoin.
Interesting. The government said a new licensing regime for virtual assets service providers will be introduced under the Anti-Money Laundering Ordinance Amendment, and the bill will require any company conducting virtual asset business in Hong Kong to obtain a license. I mean, I know there are some meetings underway with regulators as well, with your department as well, and can you just give us a hint of what kind of criteria or the standards will be for this mandatory licensing regime? Because a lot of industry insiders, companies, executives, or work professionals are awaiting for clearer guidance as well.
Well, this is a very loaded question, and I'll try to answer in 3 layers. Okay, let's start the basics. So obviously, the Hong Kong is an international financial center, so we take the reputation of Hong Kong very seriously. And by that, I'm talking about when people do business in Hong Kong, we want to abide by international rules. So one of the things, of course, is being looked at very seriously is anti-money laundering. So that's why the Hong Kong, being a responsible market, then our regulators have the responsibility and oversight to make sure that all the companies engaging, in this case, the virtual asset business, they fully follow the rules of anti-money laundering. Now, how do they do that? Then the virtual asset player, they have to have the technology and the procedure to make sure that the KYC, so they know your customer, they have to understand that all the customers they're on board, they know who they are, and also all the money flow are legitimate. So the virtual asset operator, they have the responsibility to ensure to the regulator that they can do that. Now, so just now you asked me, so what's the criteria that the regulator is looking for? Now, imagine you are the regulator. You don't just say, oh, are you going to have better control of this anti-money laundering? Yes, no problem, just trust me. Right? You can't do that. You have to show the technology about how you do the checks. You have to show procedures about what the steps you have to go through. So these are something that I think we can easily understand where regulator is coming from. They just want to make sure that the firm that they give license to, they are fully capable of doing what they say they will do. Okay? Now, so this is the basic about the KYC and money laundering. Now, the second bit of it is that obviously when we look at the regulator, in this case SFC, we have to understand that SFC is predominantly a regulator, or what we call the intermediaries. So what I mean by that is, so let's just say that there's a property developer. They would like to tokenize some real estate. Now, so would SFC regulate that real estate company? Probably not. But instead, so obviously when the property company tokenizes the real estate into a token that can be traded, somebody has to provide the platform for them to trade from. So that's the intermediary. So as a result, then the SFC will also regulate this particular intermediary, as opposed to what we call the asset owner. Now, the third thing I just want to just briefly touch on is, of course, when we think about the virtual assets, people think, oh gosh, this is very complicated. Now, of course, the regulator, they will also want to protect the investors. So regardless of the complexity, the most important thing that the Hong Kong regulator SFC is giving confidence to the market is that 100% of the assets of the customers on the virtual asset platforms are fully ring-fenced. So in case the virtual asset company, unfortunately, goes out of business, the client's money are sort of segregated. It's totally safe. So this is another important piece of the regulation that SFC has to protect the investors.
Right, it's also to do this in a more responsible manner and safer manner. And also, the government also said that the priority would be to digitalize the local financial system. With the virtual assets, it will serve as kind of like a bridge between the traditional financial institutions and the new sector. So how do you think about the link between the new market and the traditional financial institutions?
Well, the short answer is, basically, it's not the old and new so much. If you look at it from let's say e-commerce. So before there is e-commerce, people buy from physical shops. So, but nowadays, people are having a problem to adapt to life without their cell phone while ordering from online, the experience. So the same thing applies to FinTech, virtual assets, and so on. If you have the ability to fast track and accelerate the timetable, let's just say we fast forward to 10 years later, looking back, you can argue that there's no longer the distinction between so-called traditional assets and digital assets. But by 10 years later, all the assets arguably will be tokenized or somewhat accessible via digital means. Now, so therefore, I think we are just in this sort of transition period where the future is well represented to the digital world. So I'm sure many of us, including your viewers, they probably have experience going to a bank. They have to wire some money to their family members overseas. So like parents try to wire some money to the children overseas for tuitions, right? Now, so typically you go to a bank, you will pay, let's say, $200 Hong Kong dollars, and wait for 2-3 days to make that wire transfer. So this kind of experience is just very common, right, for all of us. But imagine in the future with digital assets using blockchain and then underlying the financial technology infrastructure, instead of paying $200, maybe you're paying $10. Instead of 3 days, you're talking about much shorter time, let's say 1 hour or even shorter. So that's the kind of experience that will be totally different from what we experience today.
Right, and also speaking of the virtual assets, how could it also help a lot of, for example, the small and medium-sized enterprises, like using this new channel to raise their funds to develop better?
Yeah, well, I guess perhaps I can step back to not just focus on virtual assets, because FinTech has just so many different segments or usage. So for example, when you think about SMEs, now SMEs oftentimes, they need cash flow, they need working capital. So in the past, what do? If they need to get some money, a loan from the bank typically will ask the owner of the SME, oh, by the way, do you have a property that we can use as collateral? And if yes, great, then they would kind of like use that collateral. On top of that, they ask you as an owner to be the guarantor, right? So it's a personal guarantee. So this is the traditional way of getting some loans. Now, but with FinTech, because the data will allow the bank to get a better assessment of your risk. So imagine you're running an e-commerce business. It's let's say a small online shop selling sports shoes. But you are doing, let's just say, 50 million, 10 million Hong Kong dollar business a year. But since you're selling e-commerce, all these transactions data are online. And if the bank can get access to your data, they can have an assessment about how healthy your business is going. If it's very steady, then the bank is actually feeling pretty comfortable, right, to lend some money to this SME without asking for collateral or personal guarantee. So this is another major advancement of FinTech.
Okay, hold that thought, King. We'll take a short break for now, and coming up next, we'll have more discussions about the city's FinTech development as well as the virtual asset development, so do stay tuned. Welcome to the second half of All About Money. I'm Chloe Fong. I'm at the Hong Kong Convention and Exhibition Center, where the 7th edition of Hong Kong FinTech Week is underway. With us today is Mr. King Leung, the head of FinTech at InvestHK, which is one of the organizers of this event. So great to have you today, Mr. Leung. So previously we have talked about the new regulatory framework possibilities in Hong Kong. Now, I also want to talk about how this new framework could possibly attract a lot of talents, FinTech talents, to come back to Hong Kong after the very severe exodus phenomenon. We know that previously, because the government didn't give a very clear signal to the community, many FinTech executives, they have already relocated their companies to other business hubs, for example, in Singapore, in London. So how confident are you in terms of attracting those talents who have left back to Hong Kong?
Well, we are exceedingly confident. Now, the reason why I say that so confidently is actually very simple. When you ask around, just don't listen to us. You just ask your friends around you, particularly for the expatriates or perhaps people from mainland China. Just ask us around. Actually, most people, if they have a choice where to live, they would choose Hong Kong, right? Because Hong Kong, again, is very safe, and this cannot be said for a lot of cities around the world. And Hong Kong, as a matter of fact, of course, I think the property is a little bit high, but the cost of living for other things are okay, right? So far, we haven't experienced any major inflation like other parts of the world, right? Now, and then for people who have families, so naturally, because I have 2 kids as well, then you think about education. And particularly for people who are in sort of more senior position, sometimes they will consider sending their kids to international schools. Well, I think for some other markets in Asia, they have some problems when it comes to the international schools entry because they're just so full and they have no space. And whereas Hong Kong, we have been really helping to grow this international schools community. So we have the slots. So that's also important to the parents. Now, and then you talk about the vibe. Now, Hong Kong is known, right, for the lifestyle, the vibe. And of course, right now, we're still just slowly and gradually opening up. But then the Hong Kong vibe is something that a lot of people really fall in love. So that's why and plus, I think if you talk to some executives, in fact, I talked to some major executives from mainland and asked them, by the way, what really attracted you to Hong Kong? They said, oh, we like the outdoors, we like the beaches, we like the hiking. Now, this cannot be said for a lot of cities across Asia. So if you add all this up, on top of it, Hong Kong is still an enormously large market when it comes to the high number of high net worth individuals. In fact, in a recent survey, actually Hong Kong has the highest high net worth individual concentration, the density in Asia. So the market is here, right? And then still, Hong Kong is still the gateway to the mainland because of the free flow capital. So I think if you add all these things up, of course, the past few years have not been easy, but those are basically just a bump on the road. Those are hiccups. So once things return to normal, we are very confident that the talented people, they know where to go, and that will be Hong Kong. Because like FinTech, people like to talk about the ABCD, right? So the AI, the blockchains, the cloud computing, and big data. Of course, I think the blockchain is actually one of the major infrastructure of modern finance and fintech. Now, when it comes to blockchain, there's an organization called CoinDesk. It is one of the most respected organizations in the sort of digital assets crypto space. And they do basically annual study about the leading educational institutions around the world when it comes to blockchain education. And guess what? In the year 2022, even in the top 25 universities in the world, Hong Kong has 4 in the top 25. And number 1 in the whole planet, on the whole planet, is actually our PolyU. It's the number 1 blockchain school on the planet. We have 3 other schools in Hong Kong in the top 25. So if someone tells us, oh, where are the talents, tech talent in Hong Kong? Well, how to explain that we got all these high rankings? They don't happen, they happen for a reason. We do have the talents. Now, of course, the talents, you can argue, those are the raw talents. So we need more businesses to basically provide employment so that these tech talents have places to basically practice, right? Practice what they learn. So this is where Invest Hong Kong comes in. Because Invest Hong Kong is the Hong Kong government's departments responsible for attracting different companies to set up and run in Hong Kong. So we run this program called the Global Fast Track Program. So that is a program that is basically business matching. So we would talk to a lot of the big financial institutions, the major banks, the major insurers. We talk to a lot of the investors. We talk to some channel partners. Now, the reason why we aggregate all these resources is to make it easier for the fintech firms to find clients and to find investors. So when these firms set up, well, naturally, they have to hire people. So we have the raw talents. It's just that we need more companies so that they can provide the opportunities for these talented people to apply their skills.
Right. Other than that, how can we also grow our local financial technology ecosystem in a more comprehensive and holistic manner? What do you think are the priorities for now?
I would summarize it in 3 things. First is the commitments and the mindsets and the future direction of the government leadership. So that basically is the entire Hong Kong government, from top down, including the regulators. And that commitments and support is really the starting point. So that gives the whole business community very high confidence about the clear direction going forward. That's number 1. Now, secondly, naturally, we need to have more companies engaging in this kind of activities. So that's why just now I talk about the Global Fast Track Program that Invest Hong Kong is responsible for. But for us, it's almost like a funnel. We are in the top end of the funnel to try to get all these really capable companies to set up and run in Hong Kong. Of course, there are some domestic firms too. They are doing a great job at the Cyber Port, at Science Park. So as a community, we provide the vast group of companies that are innovating. Okay? Now, so they're here. The third thing is also another very important policy from FSTB, the Financial Services and the Treasury Bureau, and that is called the FinTech Proof of Concept Subsidy Scheme. So what that means is that for the financial institutions, the big banks, of course they have the financial resources, but then if the government is really stepping up to offer some extra incentive, so that if they decide to work with a fintech firm, so typically they do a test, we call POC, right? So the test, in many ways, is being paid for by the governments. So if you are the bank, you want to innovate anyway, because you don't want to be left behind. And then government provide the support, why not? So they can really speed up their process to try something out. Now, if they tried it, they like it, then they offer a contract to the fintech firm, they roll out some new technology, upgrade the services, offer better services, faster, cheaper to the Hong Kong citizens, to SMEs. Everybody's happy.
Right, and speaking of that, I do want to know your thoughts about the possible change on the mainland as well in the future. Hong Kong is being under the one country, two system, which allows it to explore its own policies. For now, China is still banning crypto trading and mining, right? But do you think in the future, After Hong Kong's the new regulatory framework is having more experience, do you think it can serve as a reference for the mainland? And then the mainland authorities could also change their own policies in the future. Do you think that it would be possible?
No, the short answer is we have to step back and understand the considerations. Because again, in the mainland, there are lots of really smart people, a lot of very smart policymakers. So they understand what's happening in the macro world. But then, of course, there are different considerations. So naturally, Hong Kong, being an international financial center, we have the free flow of capital. We have this privilege for many, many years that basically has been one of the building blocks of Hong Kong modern finance. Now, in the mainland, because of different considerations, the capital flow may not be as easy outside the country for good reasons. And then for that reason, so we can imagine why in the mainland, the cryptocurrency is banned. But cryptocurrency, in a way, it operates on blockchain. So in a way, it's difficult to ban it. So once you buy the Bitcoin on blockchain, then the money flows. But because in the mainland, there's this policy of capital control, then naturally, I think cryptocurrency may not be as welcome. However, in Hong Kong, since we have free flow of capital anyway, so in Hong Kong, it makes perfect sense that we still allow this business activity to operate. Because again, this is what Hong Kong is supposed to do, is to facilitate international flow of capital. So this is the one thing that people need to understand about the difference in treatment when it comes to the sort of cryptocurrency. Now, the second thing is, now Hong Kong, we always see that we are just one of the many components to contribute back to our motherland. Now, one of the things that we can do, and that is the sandbox, because obviously the world is changing very quickly, and for us, we are just a city, so we have sometimes the luxury, we can try different things. Whereas in the mainland, it's a large country, it's the second largest economy in the world. So there are a lot of considerations. So that's why, just like anything, it can be even a corporation. When you want to do something new, you want to do a test, right, before you roll it out. So Hong Kong is perfect, right? Hong Kong is a perfect place to be the testing ground. So if something works, and then the leaders in the mainland feel that there's something that can be useful for mainland, for the citizens, for different companies, then I'm sure that they will consider.
We'll see how it goes later. One last question. What do you think about the outlook of the financial technology sector later on? I mean, now we have the global economic downturns, higher interest rates, and recessionary fears. And also, we just went through the crypto winter, like the prices going up and down with very high volatility. Are you still positive about its growth later on?
Absolutely. Now, first of all, we are looking at business cycles. It's not something limited to virtual assets, right? Even stocks, real estates, I mean, all these different assets, they have business cycles, right? They're ups and downs. I mean, it's something that we're used to. So naturally, of course, I think the current outlook can be challenging because of high interest rate environments, high inflation in many Western countries. So these are I would say, once in a generation type of challenges. But then naturally, we are looking at ups and downs. So I think a lot of these savvy investors, we are talking about buy low, sell high. So now a lot of these savvy investors, they are like, okay, we are ready to buy low. So in a way, now, are we talking about now is the bottom? Nobody knows. But definitely the business cycle itself is just a natural phenomenon in modern economy anyway. So the savvy investors, they have the dry powder, they have the cash set on the side, and they're ready for the buy low moments.
And that's also what we have been seeing at the event here as well, with a lot of savvy investors looking for new possibilities and exchanging their ideas. Thank you very much for your thought. That's Mr. Leung, the head of FinTech at Invest Hong Kong. And thank you for watching All About Money. We'll be back next Sunday night. Until the next time, please have a good night.